Hello, good evening, friends. Right. So some of my clients, a couple of days back, they're asking for my opinion on this company called as Alembic Pharma. So recently, if you are watching the news, you might have come across a news called as even the LIC has increased its stake in this company, Alembic Pharma, whereas the other companies, mutual funds and foreign institutional investors, they have reduced their stake in this company. But on the other hand, LIC has increased its stake. So therefore, some of my clients are asking for my opinion. So what is your opinion, sir, on this company? Whether should we go for this because the mutual funds and foreign institutional investors decreased their stake, LIC has increased. What is your opinion on that? Whether you are positive on this or negative on this? So the bottom line is yes, I am completely positive about this company. Since the price has increased for the past 1 year, so your returns may be less, but definitely the company outlook is positive. Had you invested somewhere in March 20 or April 2020, your returns would have been high. Now the price is already 970. We missed the opportunity at investing somewhere 600 or 700. No doubt, already prices increased substantially. Therefore, our returns may be less, but definitely you'll get the returns. You may not be able to get 30% or 40% return on the stock, but definitely I can assure you, in the sense of there is more chances of getting at least 18% return. So this is my investment philosophy. I will never suggest too risky stocks, and I'll never suggest two stocks which will give high returns. So my target return is 18%. So to keep my clients on the safe side, I suggest them to expect 18% in the stock market. If you are able to get more than 18%, it's well and good. It's your luck. Assume it as a luck. So therefore, don't target more than 18% return. So if some stock is giving 18% return, don't hesitate that, because we have very less quality stocks. The quality stocks in the market, the opportunities are very less. Even though people are thinking that the stock market is very opportunistic, no, very few companies are good companies and less risky companies. Many of the companies are high risk category. Many of the companies are high risk category. Very few companies you can play very safely. Therefore, I can limit my target return to 18%. So always my investment philosophy is 18% return. I can suggest the stock only if it gives 18% return. Okay, so I don't assure you that you will get 24% return or 30% return, but there is more chance of getting 18% return. So that is my target return. So safe side, you will never lose the capital. You very rare chances of losing the capital. If you invest in the stock suggested by me, very rare chance of losing the money and very rare chance of getting huge profits. So moderate returns, conservative basis. Okay, so if you look at the conservative basis, I suggest this stock to invest. Okay, so what are the positive factors? Obviously, it's not a new company to this is not a new company to bother about, sir, whether the price may be rigged or how about the company. No, the company has an existence of more than 100 years. The company has an existence of more than 100 years. No, not a child play. And diversified products. They are not focusing only on one products. They are not focusing only on one product. They are focusing on multiple categories, multiple products, so in multiple countries. So therefore, diversified product line is there. And one thing I observed from this company is that they are very particular about the profit margins. On one side, though, they want to launch many products, but they are very conscious of launching the products where the profit margins is high. Normal generic products may give 8 to 10% profit margin to the pharma companies, whereas the specialty products will give 20 to 40%. So this is the beautiful thing I like it from about this company. So on one side, they are balancing the diversified. They are going to launch many products. At the same time, they are very particular about this strategy. So where the margins are less, where the pricing pressure is more, they are not doing that. Even their capital investment R&D expenditure is also focusing more on the high margin products, high margin and low competitive areas, high margin and low competition areas. So therefore, based on these three factors, the company is not a new company. They are not focusing on only one product. Multiple products are there existing and on the pipeline, upcoming products, and they're focusing on the specialty category where the profit margins are high. The specialty category where the profit margins are high. So of course, everybody will talk about the positive factors of any advice, but I do talk about the risk factors also. There is a risk factor because, as I told you, in between the March to April, the price has been increased substantially. Okay, so that means the price already increased substantially. The future growth potential may be less, and there is a chances of falling it also. At present, the price is 979. There is a chances that it may again fall to 850 also. Okay, that chances is there. That is a risk factor. But even if it falls 850 also, there is all chance of bouncing it back. There is all chance of bouncing it back. So therefore, that is one risk factor. Those you who wants to maximize your returns, better wait. Those who don't want to miss out the opportunity, better invest. Those who wants high returns, my target return is 18% for 1 year. So those who are targeting more return, wait. If at all the price may fall, if the price does not fall, I cannot assure you. Okay, for them they may wait. Those who want more than 18% return, they may wait. But those who are satisfied with 18% return, they can invest. Okay, already price is increased substantially. And the important drawback, though there is a trend of improving, but still the important drawback is that significant dependence on US revenues. Even now today the company is depending more on the US revenues. That is not good for any pharma company. So any pharma company depending more on one country, and most especially in the US, is not good. So any pharma company has to focus on other areas also, other countries, non-US revenues. But this company, though the non-US revenues is increasing, but still today's level US revenues is still dependent. Therefore the worst is not yet completed. Still there is much more things to be done from the company side. It is not that company has done everything well from its side. Still there are much more things to be done from the company's side. So significant dependence on US revenue. Hopefully they will reduce the dependence on US in near future, maybe in 6 months or 1 year or 2 years. They may reduce the dependence on US revenues, which is very positive news for the investor. Okay, because these are the two risk factors. And next, so short term to medium term horizon. Okay, 1 year target. So depending upon the events that may take place in the coming next 1 year, so you can hold on the investment for medium term. So short term is confirmed, wait for 1 year, based on the news, based on the events that may occur during this 1 year, you can extend to 3 years also. That potential is there. But don't bother about for less than 1 year. You please stay on with for 1 year, at least 1 year, you please stay on. Even the price falls, there is all chance of bouncing it back again. So therefore, please stay on at least for 1 year. During the 1 year, if the company is successful in implementing its plans and strategies, if everything turns out positive, okay, then you may extend your investment horizon to medium term. Though the price has increased substantially for the past 1 year, but when you look at the important ratios, which we pursue confidentially on our own, which I don't want to reveal, that is our core strength. Which ratios? If you go to the internet, there are 101 ratios. They will give 101 ratios. But which are the key ratios to consider depends upon the company, depends upon the economic position. The key ratios to be considered may change. It is not that always this ratio you have to watch, for this company always this ratio, or for this industry always this ratio. No, depends upon the business, depends upon the company, depends upon the economic environment. The key ratios to be watched may change. That is our core competence, which I don't want to reveal. So based on our analysis of certain ratios, even though the price has increased substantially, but still there is a lot of potential. When compared to other companies. There is a lot of potential. It may go to 1200. There is no worry even if it goes to 1500 also. There is no surprise even if it goes to 1500 also. If it reaches 1200, yes, my target return is reached. I am satisfied with that. If I get more than 1200, bonus for me. Okay. So therefore, ultimate conclusion is today we are recommending this stock on 11th July. So on this date, the price is rupees 975. My target price is 1175. Target period is 1 year. Percentage of return is 18%. Okay. Right. So this is my opinion or recommendation. And finally, this is ultimate conclusion. Invest half of your affordability. If the price falls, then further you can further the investment. Therefore, overall, the positive factors are outweigh the negative factors. Everywhere, every company, always the factors will be there, both positive factors and risk factors. No company, no point of time they say that future is very bright. Okay, no, there is no company which have only positive factors. So for this company, at this point of time, the positive factors outweigh the negative factors. So therefore, those who don't want to miss out the opportunity, those who are satisfied with my target return, conservative return, you can start investing. No, sir, those who are very risk averse, we don't want to take any risk. We want more returns. Less risk, more returns. That kind of category people, they can wait. But that will never happen in the stock market. Low risk, high return will never happen in the stock market. Okay. So if you want returns, definitely have to take the risk. Sir, I don't want to take the risk. I want to wait still 850 and I'll get 850 to 1200. I can earn more returns, though that may not be possible. So that means if you are waiting to invest, that means you are waiting for the stock to fall to 850 and again it bounce back to 1200. That means you don't want your price to fall, low risk, and you want high returns. That is what will not work out in stock markets. Okay. So when to sell off and when to purchase, the timing is very important. The timing is very important. So therefore, for the moderate investors who want to take low risk with moderate returns, not high returns, low risk, moderate returns. So this is the stock I can advise. Okay, thank you.